Thank you very much for staying with us and watching SMART24 TV. My name is Anthony, your host for Financial Markets, where we talk details of savings and investment, especially in financial markets here in East Africa, and particularly here in Uganda. Today, still joining me on the show is Mr. Musazi Chimuri, trading manager here at SBG, and we are at the SBG offices having a good atmosphere at the moment. Now, like we've mentioned in the first part, the treasury bonds and bills market definitely kind of shed off some of the risk, especially during these times of inflation and uncertain economic times. Now, let's talk about the equities market. Where do you see yourself investing in such a bear market? And I'll ask Mr. Musazi a very specific question concerning the equities. There is a time that, of course, people can, take in shocks and say, okay, let's keep buying. Whenever it's going down, we buy. But there are those times when things really go red and all the signs are saying, you know what, you should stop at this moment. What should you do to pick shares in a very bear market where you're looking at negative values almost on every company?
Okay, thank you, sir. I think I would start with the term you used in a bear market. What may be bear to you may be an opportunity to another investor. I'll give an example of when is the best time to enter into a stock. So you may be looking at a stock that is on the downward trend. Usually every stock, like any economy, there is always a recession. There may be a rise and a recession. So the same applies to these stocks. At times there are times when the stock is at its peak, and there are times when a stock is on the downward trend. Of course, earlier we had mentioned the reasons why a stock may go up or down. I may reiterate the same, but for this specific purpose, when is the best time to buy a stock? At the point when you feel it is at its lowest, or it's at its low, that is the best time to buy. Usually most investors come into a stock when they see it has hit the peak.
They're excited.
And thinking it will continue on the upward trend. Yes, it happens. I'll give an example of East African breweries. It has been going up and up on the Nairobi Stock Exchange. And among the reasons I mentioned was information. The reasons that move stock. Information. There was information that Diageo, a company out of the London Stock Exchange, is coming to buy back stock of East African breweries on the Nairobi Stock Exchange. So the price kept going up from the 150, 160. Yesterday it was 170. It's because someone had that information. So had you gotten that information earlier, the best time to enter that stock would be when it was still at the low. So that is the key peak, not only for NSE, but every market. Once you value a stock and you think it is at its low, that's the best time to get in, to pick a stock. Also, I always encourage people to invest in stocks that do things they understand.
The sector, in other words,
the sector that you invest in a stock which is in a sector that you understand. Yes, you can't understand everything, but at least there are those where you say, for example, if it is MTN, you know what they do. Every day you are spending money on the calls, data. So it's very hard to go wrong when you go into that stock. But also you need to look at your future plan or your perspective. Are you investing for a short term or a long term? So if you are investing in a growth stock, we usually call it a growth stock, where you invest for maybe the 3-5 year period. These companies usually, which we call them growth stocks, they usually keep making a profit or a return year on year. So it means you have to study their dividend history before you enter the stock, because of course no one would want to hold something without any return. There are companies which we know that have paid a dividend religiously because they make a return, a profit year on year. I don't want to usually be sided, but I'll give examples generally. In our market, look at, say, Stanbic Bank. It has been paying a dividend year in, year out. Reason, not that banks don't make losses, but it has staunch leadership, good governance, both corporate and ethical governance, and we are open book. So you can see that here is how much they made on this and that. Then there are other stocks like, for example, I always mention Umeme and MTN because people know how they make their money. That's a low-hanging one. Every year they keep churning volumes of calls. You keep loading your car. It gets finished, you get done, you have to keep paying. So all they have to do is expand the network and manage the costs. That is the role they do. So that service is good and the returns are better. So if you're looking at a dividend investment motive, always go into stocks that you are solid sure that will make a dividend. That is why I give an example of Umeme and MTN. Really, it's very hard for them to go wrong, to make losses. And also there are some other beyond, of course we look at technical things like what is the yield, what is the price to earnings ratio. At times I don't want to lose my viewers when I talk about the dividend yield, which is the current price, I mean the way you go into dividing the current price by the dividend to get the dividend yield. Usually that is technical, that's our side. But to a layman who is viewing, I'll tell them, look at a stock which is always paying a dividend and which dividend is commensurate to the market standards. Usually there is the industry yield, industry dividend yield versus that very company. Some pay a dividend lower than the industry, others higher than the industry, but at least now there you're already talking about a dividend, because there are also companies which at times make losses and even never declare a dividend. But I'm looking at those that are paying dividends religiously. You look at which one is paying better. If it is the banking sector, you look at which one is ahead. You may compare Stanbic, Bank of Baroda, DFC, they are listed. You look at them, with the technical people can advise you based on your investment motive. Yes. But to wrap it up in which is the best stock you need to invest in and when do you get in, one, get in when you think it's at its low. You don't chase it all the way up. You know, you have investors who give you an order, I want to buy a stock at 500, then 600. So once the price moves, they keep adjusting their price. You take a decision to enter in at a point you think it's at its lowest. And you can always choose to get out when you think it's at its peak to make that gain. Two, you need to look at the dividend history if you're looking at the yield. There are some investors who have personal attachment to some stocks. Now that one goes beyond our technical thinking. I usually give an example of EABL. Much as it has been making money for people in and out, but for religious reasons, some people may say, I don't go into that stock. So yes, we do the advice. You know, it's a broad question. We do the advice on which stock to pick, but the final decision remains with the investor. Because someone who has personal sentiments, someone that says I'm saved, much as it is high return, I won't go into it. Really, your professionalism can't go beyond that. You respect the client and drop it at that.
Yeah. You see, there is also the element of liquidity. I've seen some stocks that do pretty well in dividends. Yes, they issue dividends, good dividends. They also have good activity on the market. But liquidity, there are stocks that are people's favorite and whereby even when this stock is doing really bad, they will be trading on that stock. I will allow me to give examples because at least I'm a journalist. I'm not caged like you. Stanbic stock has been one of the most consistent in terms of trading and providing liquidity. Almost on every single day of trading, you'll see something done on Stanbic, no matter how bad things might turn out to be. Now, that should also be put in contrast with, okay, the dividend and the capital gain and so on. But how do you tell that a company will offer you liquidity at the end of the day? How do you get to contrast and compare liquidity and also gaining in terms of dividend? What is more important? Which one should you give priority when you're coming into the market?
Thank you. When we're looking at liquidity, you consider, actually the first thing is you consider what is your investment motive. That is where I started. What is your investment strategy? Are you long term? Are you looking at the growth stock? The growth stock is the one you will hold for a longer hold. Or are you a speculator? We have what investors we call speculators. They come in and want to take a margin. That is a section of how do you gain in the stock market. You may get a dividend, but we have people who come in to buy low. It moves, sell high, get out, take the profit. So if you are a speculator, really liquidity is very important in which stock you go into.
Yes.
Otherwise, there are stocks you can get into, and the term the youth uses, you die in your own movie. You get in because you are smart, you have done all the pros and cons, but at the time of selling out, you can't find supply. It is not very common in our local listed stocks.
Yes.
Liquidity usually affects the cross-listed stocks in our market. Reason, at times there are very few shares in the depository here, and those who hold them at cross-listing. Cross-listing is where a stock is on more than one stock exchange. We have multiple shares listed on our stock market, but 50-50, half are cross-listings. Like, for example, if you came to buy Kenya Airways today, it may be a good stock for you, or East African Breweries on our market. But at the time of selling out, you may find it harder because maybe there are no people willing to buy into the stock here due to that issue of, if I get in, how do I get out? You may put the offer, but Kenya may have a different or better price compared to Uganda due to the foreign exchange issues, or even the would-be buyers would say, if I get in, how do I get out? So you hold the shares, but trading them becomes a challenge. It usually affects cross-listed stocks. Most of our local listings, other than prices moving down at times below what someone would expect to sell at, the liquidity is always there. It's only the cross listings that find a challenge, because much as they do the cross listing, most of the stock remains in the primary listing where the company or first listed or originated from. So basically that's it.
Talking about cross listings, that's a very important point out there. We understand the terms of cross listing. The company has to come from their primary market and now list on this other market. And like you've seen, the experience we've had on the Uganda Stock Exchange is that they don't offer liquidity. Yet we see movements and opportunities in these cross-listed companies, because truth be told, every single day of trading, whether those stocks had trades or not, their prices move. Unlike the local stocks, where we only have movement during trading. Movement comes along with trading. In other words, you see the prices move for MTN, and you see they had a volume to give evidence that actually this was due to this volume. Now, what moves the stock, what moves the stock prices on these cross listings? Are they factors like exchange rate? Are we harmonizing with the primary market to see that the stock prices don't differ a lot to create the disparity? what really moves these cross-listing stocks? Because they do provide opportunity for traders as well.
Sure. The cross listings, usually if a stock does not trade in a cross-listed market, they capture the price of the home market. For example, if today East African Breweries did not trade in Uganda, but it traded in Kenya. Usually the Uganda Securities Exchange benchmarks the price of Nairobi and then factor in the foreign exchange rate conversion to quote the equivalent of that price on the Uganda stock market. So much as there was no volume here or activity, it happened the other side. Also too, when you are valuing it or pricing it, we look at what is the exchange rate, because the home listing it is in, say, Kenya shillings. What is the exchange rate in Uganda? If it is say 33 or 32, the price is factored into the conversion to get its current value on the Uganda Stock Exchange. But we try to harmonize by looking at where is the exchange rate. But if there was liquidity the other side, definitely the price will, on the home market, will be the driving force to bring the price quote in Uganda. However, we are also having the liquidity issue. The exchange came up with some regulations and rules. They're called interdepository guidelines. And they're really there, only that at times it may take time to allow free movement of stock from the primary listing, say in Nairobi, to the Ugandan market, to a cross-listed market. It's allowable. We call it the interdepository rules and procedures. They are there, all the market players know them, and we know how you can move shares. For example, I may hold them here, but if I see that the price the outside is better, I can sign forms to move them to the other market. Or if there is much liquidity to the other side. But of course with justification, you don't wake up and say, you know, I don't feel like trading these shares in Uganda. There are some regulations, we call them interdepository regulations. They are there. Yeah.
Mr. Musazi, talking about also cross-listing our companies, for example, on NSE, I know Women himself is doing very well on the Nairobi Stock Exchange. When do you advise someone? We talked about picking the share now on the USE. When do you advise someone to get into a foreign market, and how is it done? At least for the rules here in Uganda, are there provisions for people to be able to trade abroad even when they're still here in Uganda, or it's actually kind of a bit hard at the moment?
Actually, at the moment, it is not hard. There are two scenarios. One, in the spirit of the East African community, there is free movement of investment options. You can open a shares account. We as SBG have partners in Nairobi. SBG Standard Bank Group Kenya is there, plus an array of other brokers who are members of the Nairobi Stock Exchange. All we do is to be your conduit. We can facilitate you opening an account on the Nairobi Stock Exchange and be able to trade stocks on the Nairobi Stock Exchange freely. The key issue in cross-listed trading, cross-border trading, is it has the foreign exchange rate impact. So you need to look at how much threshold you are going to invest, or the minimum you are going to invest in to make a meaningful return the other side. Because at the time you are sending money there to invest in a stock, there is a foreign exchange rate conversion from Uganda shillings to Kenya shillings, because they trade in Kenya shillings. And the time you sell out, still they will pay you, either you have to open a Kenya shillings account here, but still at a later time you will have to do a conversion. So some investors have been smart and they have opened a Kenya shilling account here, but anytime you want to use that money in the economy here, still the conversion will
has to
come in. The dividends paid in a cross-border market will be in the currency of the home market.
Yes.
For example, if Safaricom is paying a dividend, they will pay it in Kenya shillings. once it's coming to your account, you may be smart and open a Kenya shilling account here and receive your dividend there. However, even then, once you want to use that money, you'll have to do a conversion. So you need to look at the size of how much you are investing the other side. I have a very recent scenario of a client who invested in MTN, and they invested the minimum. And I'm saying this because I don't mention names, but I'm a practitioner, I've seen it. They invested a minimum of 550 shares, because that was 100,000. And when the price a bit dipped to 190, down from the IPO of 200, they came in to sell. And after selling, the home market where the client resides is in Nairobi. So we had to do a transfer of the money from Uganda shillings. Remember, now it's like 100,000 to Nairobi. The conversion applies, and that side, I think the bank applied the international transfer charges plus processing fees. On record, the shares were sold and the client was paid. But in the account, it wasn't matching with what he was receiving. I think the money almost disappeared in combining the transfer charges. So I usually always advise investors to, before you venture into a cross-border market, always consider how much are you taking there. Because really the foreign exchange rate conversion risk is real in cross-border trading. But yes, we can facilitate anybody who wants to trade in cross markets in Kenya, Tanzania, Rwanda, but we always advise to consider how much you are investing that side. And recently there are some regulations and some trainings we are going through to have the East African markets merged. When you talk to the exchange, the stock exchange, we are having those trainings, and talks are underway to have one market. For now, Kenya, Uganda, Rwanda are in, and in the sessions, Kenya has stayed on the side as they watch, because their market is bigger, as they watch what will really happen in this market. But I'm sure once it gets embraced, we shall soon have one trading platform where you can place an order all over without necessarily opening an account in each of the markets.
Wow, that's beautiful. As we wind up closing, of course, we would want to see your view of the market as we come into now the fourth quarter of the year. Of course, people now are anticipating what should I start with next year, and how is this quarter going to perform. Of course, recently there was a decline in performance, but now as if it's coming back to, the market is returning to insane activity. I don't know why, or maybe because we are ending the year. But where do you see the stock market, the debt market of East Africa, at least as we wind up 2022?
Usually the first 3 quarters give you a picture of where you're going. Specifically for Uganda, when there is no corporate action, the volume tends to be lower than the year before. For example, last year you saw a lot of volume was done in the market due to the MTN IPO. But this year we may see a slight decline in turnover. That tends to impact on the year-on-year performance of volume trade. 2, in the last quarter as we wind up, yes, I'm an equities dealer, but we have our clients. Some are individuals, that is retail, and fund managers. The volume you are seeing now, every quarter with them they do a review of how has been the performance and where should be our next investment options, where do we put emphasis. So we have just closed the quarter, the previous quarter, and we are in a new quarter, the final quarter. And fund managers are scored on one, performance in terms of return, but also deployment of the funds. Otherwise, they don't make any gain when they receive funds and sit with them. So they tend to deploy funds in the final quarter before the year closes. That is the activity you are seeing currently. Actually, few have come in, others are still taking positions. They do not only invest here, they invest across the region. So we take part of the tide in Uganda and do the volumes. That explains the volumes you are seeing in the last 2 weeks, but also into other assets. They don't only invest in the stock market, but at least we are seeing action.
Finally, as we close, SBG Securities, how can someone open an account and access the services of the company here?
Thank you. We are known to have done the first green IPO. That is the total e-IPO or electronic. So those doors have not been closed. Someone can open their account by dialing *165 *65 hash on the MTN number. That is what we did during the IPO for people to access the market easily, to open an account. And it gives you follow the prompts as long as you have your national ID. You choose SBG as your broker. That is one option of opening an account. You can walk in, you can see our offices are spacious. You can walk in here. We are a team here. I'm not alone. We have a team that supports. You can come in and we open the account physically. You can use the electronic option. There is the Uganda Securities Exchange website. It's called the Easy Portal. You can go on that website. There is the Easy Portal and you create your own account. You can use the *165, still doable. But also you can walk in to put the faces to the names that you see on the screens. We are real people. We're always here and ready to serve you. I thank you.
Well, thank you very much, Mr. Musazi, for sparing time again to get to give us that vital information. Ladies and gentlemen, there you have it. I was talking to Mr. Chimuli Musazi, an SBG Securities trader here at SBG Securities. SBG, like he has said, is a stockbroker licensed by the Capital Markets Authority to carry out trade. And the show, of course, now is coming to an end, but I'll catch you same time, same place next time. Goodbye for now. SMART24 will drive your business.